Market conditions majority bullish, turning back from 13 back to 14 on the upper end of this trend condition indicator. We're seeing moving back into the green state as well, moving out of that transition. A little bit of a counter trend retracement, found support inside of this demand block. That's really what we wanted to see tested. We wanted to see if there is demand still there. So far so good. We're seeing that bounce happening in. Overall market conditions still relatively bullish. Now there are a couple caveats to that. Number one, we're seeing the breadth of the market still at 50%. So the number of stocks in the S&P above the 50-day moving average still relatively weak right here. In fact, majority bearish and compressing right here. So the compression state often tells us that it's in anticipation of an expansion state. So compression forecasts expansion, expansion forecasts compression. So we're sitting right in this compression zone. Which direction are we going to break? Are we going to break down? Are we going to break up? We're stuck right here in the middle. So that's one of the internals to be aware of a market condition that is really expanded. What kind of participation do we have in that market? We've got about half of them that are trending lower. So that's telling us that we've got markets still being run by and ruled by some of these large, massive mega cap names in the AI space and technology space, and that could become a weight at some point on the market. Let's look at VIX. We're seeing that pull back to 1620 and pulling back after that little pop up to the 20 range. Still majority bearish in that downtrend. That fear subsided relatively quickly. Dow Jones Industrial Average, we're seeing that press up into this supply block, which is being rejected so far. That's one that's also still kind of weak. 12 and 2, upper end compressing, showing some red bars toward, or red lines towards the upper end of that trend. That's just helping us see, number one, the momentum, the time frame of the momentum, the compression. Are we in transition? Are we consolidating, or are we trending? And this is telling us that we're kind of going through this consolidation phase right now. Obviously, we can see that in the upper end resistance holding so far on the Dow. Triple Qs had its breakout. All-time highs were connected to here. Watching for potential retracement all the way back down to the 236, and I don't have that demand block drawn on here. I'll actually draw that on here for our next update, so we get a little bit of clarity on some of that as well. So still moving to the upside here as well. 14 and 0, a little blip right here. We just want to be aware of when some of these little blips are starting to happen, because we may run into a scenario like we did last year, a couple of years ago. Oh, when was this? This was the beginning of 2025. Right here, as we were really expanded, we started to get some consolidation, some compression happening here, and it got kind of rocky, kind of rough right here through that cycle. We could see some of that here as well with this expansion of trend, particularly where we're seeing some of the red starting to show up, some retracement. There's some internal selling starting to happen. We already know that happening here. Okay, so we're just trying to add this. This update is really about kind of looking for the overall clues. What's the state of the market that we're in right now, and what kind of indications and information is it giving to us in terms of what could be happening as far as the overall trend. We know we're in the uptrend. We know it is very bullish. We know there's a lot of amazing, fantastic things happening, but stock markets are driven ultimately by profits, but ultimately the pricing itself is driven by supply and demand, and emotion is a big part of that. So you get jumping into the market at the wrong time, too far, too fast. Institutions may start to be selling at these levels when we're expanded. It's just a way to be able to manage the overall risk of how you're allocating your capital into the market environment. Are you entering into a lot of positions, large allocations, large position size? That's the way to be able to utilize this and say, I want to be aware of what my risk is. What's my risk exposure to this information? It's telling me we're wide. I obviously can see we've had this run up. I know what's happening in the world. I don't want to miss out on that if that's the case. And it's like, I just want to be in the market. Then you got to make sure that risk is managed. Stop losses are wider, position size, as long as that is a part of the overall strategy. IWM, Russell 2000 names, these are your small cap names. Overall, relatively weak compared to the large cap, but still moving in the overall up direction. I did grab this swing low, swing high the other day, and it was bouncing right off the 236 location. That's still in momentum. Okay, even though we're getting some red, this is just saying our shorter term trend structure is starting to break down a little bit, but we're still in momentum. Be aware of that level, that 215 range on Russell. So those are again the breadth of the market weakening, the small cap names. That's kind of your real risk on names, not performing as well as some of the larger cap names. That's our environment currently. USO we're seeing retrace back down again, back to 382, breaking through that, could retest here at 72. That's the 50% retracement, and gold also holding its overall uptrend. 311 at the open, compression towards the upper end of that range, and still above the 236. So gold still in a bullish state, really wide inside of that bullish state, and we're seeing that the demand just can't push it. There's just not enough demand because everybody's already bought in. More than likely, it's going to be buying in. What would push gold higher from these levels? It would have to be more than likely something negative in the economy, or negative with interest rates and the dollar and everything that's happening there, for that to move much higher from here. Although it's coiling, it's compressing, and that's the whole point, is which team is going to win the tug of war, the bulls or the bears. Let's look at the dollar here as well. That had been strengthening nicely, majority bearish, still in that downtrend, but trying to get a little bit of a bid here off the bottom. I actually removed SLV out of the updates. That's one that you can go out and look at as well. The silver, it's a nice commodity trade, but not in terms of kind of larger economic analysis and where are we at in the trend. Gold sometimes works as well for that flight to quality. What are we seeing? Are we seeing fear coming into the market? Is it moving to gold? So that's part of the discussion point. Oil also is kind of the an economic lubricant, or not. Sometimes it's an added tax when oil is moving higher and higher, and we're all paying more. Kind of in that inflationary tone as well. Let's look at bonds. We're seeing that really not moving. The 2-year moving back down from that move the other day, still just consolidating towards the low end of that range. 10-year also same story with that downtrend, majority bearish on 10-year, neutral on the weekly time frame for bonds that are just holding pretty steady around that 4.5 range, as we've talked about, as the Fed has not done a whole lot with rates. A couple of stock ideas to consider. You got ACUL, which has a nice confirmation bar, bouncing 2 days ago off of 236 with big demand volume coming in. So that location is now holding up. Buyers are coming back in. That could push the trend higher on ACUL. Also GILT in the satellite space. Big volume, big confirmation here, moving back into momentum. Lots of names still working, especially as we're going through earnings season here, and you're seeing some of these gaps higher. The gaps are oftentimes real good continuation of proof of where that demand is flowing. That typically gets that's the whole idea of momentum. Is you get a big volume day, it's pushing in. These guys more than likely are not going to turn around and sell everything. Okay, but there may not be as much demand to push it even higher from here without some consolidation. But we're in that zone now where you can say we're at the upper end of the range. We're in momentum. You've got big volume coming in. The probabilities of continuation of that overall move is really what the anticipation is for a trade setup like GILT. That'll do it for today's update. Everyone have a fantastic day today.